CEO of WeWork India, joining us on the show. Karan, firstly, congratulations on the listing. And since your IPO is entirely an offer for sale with no fresh issue, how should investors interpret this structure and the promoter's objective behind the listing? Help us understand that.
Thank you and good morning for having me on this historic day for the company. With regards to your question, I think actually investors should look at this with a complete sense of strength. The company isn't raising any capital only because we actually have enough capital, are generating positive cash, are profitable, and have sufficient amount of liquidity for the entire growth trajectory. The reason for doing the IPO, while obviously, as Embassy and WeWork, we've got to return some of the capital that those promoters and those shareholders have invested with us over the last 8 years when things were tough, when no one was willing to give us capital, and we still brought the business from that point to where we are today to being a listed company. It's only a symbol of strength for the organization and for the future of the business.
That sounds very optimistic. Mr. Virwani, just stay on with us. We need to slip into a time-bound commercial, but we'll keep the conversation going on the other side of this very short break. Viewers, thank you so much for staying on with us. Appreciate that. Let's talk about your financials. Now, the company has posted a sharp turnaround to profitability in FY25. This pivot has been quite a big one. Help us understand how sustainable is this profit profile or margin profile as you scale further, and any guidance if you'd like to share with our viewers for FY26 or perhaps slightly more longer term.
Sure. So I think, as you can clearly see, the business is operating at levels unlike anyone else in the industry. As of last financial year, we delivered an EBITDA margin of roughly about 22%, while the industry is in the range of between 10 to 12%. So nearly double the actual margin profile. But even in terms of total quantum, we delivered close to about 420 crores last year, which was roughly, like I said, a 22% margin. We believe that that margin percentage and that margin profile holds good even for this year as revenues grow roughly about 20 to 25% over the next few months, which we're already seeing in Q1 and Q2. Our sales velocity over the last half of the year, the first half of the year, is nearly 30% higher than it was last year. So clearly seeing traction, clearly seeing the demand that is converting, which will all sort of reflect in the numbers. The margin profile should consider to at least at minimum be as much as it was last year, and we will obviously try to push for some margin expansion over and above that.
All right, but for now, we understand you currently operate 68 centers with over 1 lakh desks across 8 cities. What's the roadmap for capacity expansion and new market entry?
Yeah. So we already operational close to about 115,000 desks as of right now. And over the course of the year, or basically by the end of the year, we will be actually closer to about 130,000. So there's some further expansion. We have some huge deals in the pipeline that we will get to announcing when we can. Really staying that steady growth rate with the business as we continue to grow, with velocity sort of matching supply growth, so that there will always be high occupancy levels as we continue to expand.
And Mr. Virwani, let's talk about the demand and the kind of mix that you're seeing within your client profiles. And of course, the hot topic right now is GCC demand, and that is increasing. Yeah. On the back of that, where are you seeing desk occupancy trends or demand for commercial co-working spaces?
So honestly, the adoption over the last few years has been absolutely crazy. I mean, today, every type of business, whether you're a traditional business, a new age business, a startup, everyone is considering flexible or a flexible offering in some way, shape or form. We're seeing a lot of the demand continue to come from global businesses, some of the large Fortune 500 businesses. We started to see a lot of adoption from Indian corporates over the last 2 years at least. And GCCs, like you rightly mentioned, which originally started as just large Fortune 1000 type of businesses. Today, every single global corporation that is, at any level, mid-scale, small scale or large scale, are hiring developers in India A lot of them are doing that in our spaces, coming into our spaces as an entry point and growing very quickly because of our flexible offering. So that's nearly about 40% of the demand today coming from global capability centers alone.
Lastly, Mr. Virwani, how do you see the demand trends shaping in the tier 2 cities, and are you looking at expanding there?
So like I've mentioned before, we don't view cities as tier 1, tier 2. I think what we look at is sustained absorption levels and sustained grade A supply. Today, 95 to 97% of all the demand and all of the grade A supply continues to be in the top 8 cities, which are cities that we're already present in. So we will just go deeper within those cities before entering into any new city today. But if a city shows that it can and is sustaining high demand and supply, we will start looking at it in the future. So there's a lot of runway still left. If you can just see that only in 8 cities, we've grown this business to be the largest in terms of revenue, in terms of profitability, and the leading player in the market. So the next few decades, we have a lot of growth left as India continues to grow.
Mr. Virwani, that sounds very optimistic, and we hope to chat with you more often now that you're listed. Once again, congratulations on your listing. And thanks so much for waiting by as well.
Thank you so much.